And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Wednesday, June the 29th. My name's John Hoagland. Thanks for trusting me with your time. As always, our focus is on seeking accurate context, always thinking about risk management and remaining patient here at the market forecast. It's National Alaska Day, also National Paul Bunyan Day, kind of fitting. As far as economic numbers this morning, the final GDP number came out. They were looking for negative 1.5%, came out negative 1.6%, a little lower than they were expecting. 8 o'clock this morning, we're expecting Chairman Powell to speak at the ECB hoo-ha today. And then at 9:30, the EIA is going to be, so far, announcing the petroleum status report that they did not release all last week. So we should be getting maybe some important information as far as crude oil is concerned here at 9:30. They're also going to be releasing all the past data that they have missed on. So it should be an interesting day in crude oil, perhaps. As far as U.S. stocks, mixed overnight prior to the GDP release and the Powell speech, speaking again at the ECB hoo-ha in Portugal. Little signs of easing of inflation in Europe. The German CPI numbers that just came out a little while ago were lower than expected. Crude prices continue to rise after the API announced a 3.7 million barrel draw in the U.S. yesterday. Again, we are expecting the EIA to release all past information and the new information today at 9:30. They're expecting a little over a 500,000 barrel draw in crude stocks. Just got word a little while ago, the president has announced we are sending new military deployments to Europe as we all try and continue to pray for peace, of course. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. A brief look at the VIX, the dollar index, and the 10-year just a few minutes ago. The VIX is up slightly at 28.53. Dollar index up slightly at 104.6. And the yield on the 10-year off a little bit this morning at 3.16%. As always, gotta say good morning to everybody. Good morning, Tachyon, first in the room. You win the prize. Scott Saw, Annie Concord, chilling with Dylan. Shaw, good morning. Patrick Zarain and Rob T. Glitter Sandwich, good morning. Jerry is awake, and I hope I am too. T-minus one more day till I start a vacation. It is the Independence Day holiday this weekend in the U.S. Don't be trading on Monday. Tachyon, downsize. Oh, you're going to go from the 150K to the 50K. Okay, yeah, it should be all about scaling for sure. You're a lot closer to the profit target in that 50K always than you are in that 150K. Charles March, good morning, Glitter Sandwich. Check out yesterday's TPO for the ES. It was a pretty elongated, toothy TPO and volume profile yesterday. We'll take a look at those shortly. Good morning, Theo, Terrence, Kevin, Bill, Michael, Vince, good morning. Chris, Grim Reaper, what's up? Lubos, Laney, Frederico, Dan Trader, good morning. Channing, I think I saw you're from Boise, Idaho. I've traveled through Idaho, but more like the Panhandle from Missoula to like Clarkston, Lewiston. I think that was it, in Washington. Beautiful Route 12 all through the Bitterroot Mountains, the entire span, just kind of zigging back and forth along a river. It was one of the most beautiful motorcycle rides I've ever taken. Tachyon, learned a lot about myself today. Now I know how it feels to blow an account, valuable experience. Yes, and one you probably will avoid doing in the future, right? Good morning, Joe Trinan. Good morning. Still in the game. Good morning, Dr. VJ. Good morning to you, DA, Manuel Caesar, Alfred, Chris Hayes, Rational Investor. Good morning, Brian. Dimitar, good to see you. David Randall. I like the 50K just to shoot for $60,000 to $100,000 a day and get just to pick up A plus setups. Yep. Isaac, William, and Eduardo, regards from Lithuania. I have a wife who has a Lithuanian lineage in her past. Good to see you, Eduardus. Chilling with Dylan, Tachyon. If I had a nickel, huh? Right? Okay. Today is group coaching. I apologize again for missing it on Monday. This is the actual link to register for it. I look forward to seeing you all there. We've got, I think, all the other links set on the website as well, so you can get the link to register. And again, I apologize for not being there on Monday. It should be a really good session today. Ute's asked that we kind of focus on self-knowledge as well as market knowledge and how that can make a big difference in our trading. So we're going to start with that. We're going to see if we can get to any and all other questions. Artem, good morning. Sarah Hall, good morning. Prayers and love to you as well. So what else? Recap today. It's my last recap until the 11th of July. Thought maybe whoever wants to come, we could sit down and have a beer or a cocktail together. I think we should have a cocktail hour for the last recap for me for about a week, and I'll probably just have a beer or something, and we'll talk about the markets and do a little bit of relaxing. Tomorrow morning will be my last forecast for a little while. We've got John Doherty, the Dancing Bear, is going to be covering for us Friday and all of next week for all of the events. Of course, we will not be having group coaching. We will not be having Make Hogue Money next week. But we do have JD that's covering for us for the market forecast and the recap, and I thank him for that. I know that he is going to do a fine job. He's younger, better looking, and smarter than I am. So we'll look forward to seeing JD. And we will be jumping into the charts here any second. I'm trying to think if there's any other information, any other things that I wanted to tell you, but I think we're in pretty good shape. So why don't we go into the daily in the E-mini S&Ps here and take a look. So we've got one of the things that I was going to be talking about, and we may as well do it while we're in the charts, is, you can be right. We started talking as this market continued to push higher, even through this big move last Friday. It was hollow. The Monday, the attempted move to the upside was hollow. We talked about yesterday the idea that this auction to the upside is not providing healthy upside auction information, and that a pullback was likely. All it took was consumer confidence to come out a little wacky yesterday, and we had a big pullback to the downside. So even though personally, and I'm hoping that the context was helpful for all of you. Personally, I thought, I should have caught a bigger part of what happened yesterday than I ended up taking. I had the right idea. I had everything lined up correctly, and yet I did not trust the fact that I could be right enough to have a move of this kind of magnitude that was kind of foretold to us by volume, open interest, and just watching, how the market is moving. The market was moving higher, but we were getting a sense that it really wasn't doing a very good job of trying to continue in that direction. So one little toe stub yesterday, and the market gets whacked, and there's very little bounce to it. So here's the 30. Well, here's we only added 1,500 in open interest to the downside yesterday. Still, that's an increase in open interest, and it's an increase in volume in futures, but the New York Stock Exchange volume was not all that impressive. We did manage to put in our recent high in regular trading hours. We're going to see that on the 30-minute chart. Something I'm always watching, especially in the S&Ps. This market doesn't like to leave recent highs or all-time highs or recent lows, and there is no all-time low in the S&Ps, but recent lows. It doesn't like to leave them in the extended trading hour session. It always likes to check them in the regular trading hour session. So we had that check up there, up to that level yesterday, and make Hogue money. We did get short up there, and we did not stick with it. It never would have hit our stop. If we stayed with that all day long, we would have had a tremendous day on that. Yes, we do have Chairman Powell speaking in 5 minutes. Will there be some reaction from that? I don't know. I don't think so. He's speaking in Europe at the in Portugal. Let's see. I think he's just going to go over there and talk about some fluff. But I've been wrong before. Trust me. And as we always say here, ACH, anything can happen. That's our acronym. So back to what we're talking about here. What does that do for us today? A volume in the New York Stock Exchange was unremarkable. A little bit lower here in futures, but down days tend to bring higher volume in futures, especially in the equities. Here's the 30-minute. Here's where we took a look. Here's Sunday night's high, which was in the extended trading hour session. We just had to take that out by a few ticks, and then things started going crazy. When we saw the consumer confidence, that was just enough of a stub of a. These markets can be like sore toes. If you have a sore toe, you're going to be really positive that you're going to bang it onto something. And yesterday, we banged our big toe in the S&Ps and in the NASDAQ and in our equities. And look what happened. We had quite the tumble. Volume was okay, not tremendous. We did add open interest, so maybe the beginning of a continuation of an auction to the downside. We don't know that for sure. Settlement is 28.2550. We haven't really gotten too far from that either side of it. There's no real overnight inventory. Or if we start to show that we're going to open with a gap, that's going to be something that I would look forward to. This trend line we've got peeking out into the chart here isn't all that strong. It's only a couple of touch points. Whoa, hang on. It's only a couple of touch points here and here. It may be something that we can use to limit risk. I'm not depending on it very much. So again, opening in range and in value, not much of a bounce here, more of a dead cat bounce, which would lead me to believe that this market is working more on accepting lower pricing than rejecting lower pricing. When we take a look at where we open here, if we reject value from yesterday, there's a couple of pretty good visuals down to 37.80, this naked point of control, and another NPOC down here at 37.10-ish. If we do remain in value and accept value, this could just bring a repair of yesterday. And we had, I think, Chillin saying, take a look at the TPO chart from yesterday, and here it is. This is a regular trading hour session only. We have 1, 2, 3, 4, 5 areas of single TPOs. This was an emotional, time framed move to the downside. That's one of the things that scares me about continuation to the downside is as a high probability is we had a whole bunch of different time frames acting on this market to move it lower yesterday. Have we gotten too short? You remember yesterday morning we talked about the weak low that we had and the unfinished downside auction we had here on, on Monday. And look what happened. We took out the Sunday night high, we failed to take above it. We come down, we take out this week low, and we continue the push to the downside. So that unfinished downside auction that we saw here on Monday, as well as information saying that this move to the upside is hollow and likely to end, should have had us looking for a shorts relatively early in the day yesterday, and had us looking for bigger opportunities. I think if we were able to get short before the opening range low broke out to the downside. Pretty decent moves yesterday. Crude oil. Hello, what's going on here? All right, so here's the daily. Okay, earlier in the week, we were kind of playing around with the possibility of a head and shoulders. That is now off the table. We've been maintaining volume on the way up. We've been adding open interest, which is encouraging for continuation to the upside. Something that nobody is looking forward to is more expensive crude oil, but as day traders, we have to be aware of this. Globally, there's the war. There's, I guess, Libya is having a problem being able to export crude oil to Africa, also supporting price. Nationally, we've got holiday traffic. We got an API draw, an EIA delayed release. It's going to happen today, but we're still kind of holding in this upside move as demand looks like it's going to increase. We're having some supply issues, of course. Volume maintains and open interest increases. The auction appearing so far to be healthy to the upside. 30-minute chart. So the market opens. We've been kind of looking at this channel. It's kind of opening, wrestling with this channel. We've got a gap. We've got overnight inventory holding to the long side. Now I'm just going to be watching to see if we can accept above this trend line, or if we reject it, we come back. If we reject it, we may see some short time frame traders, short time frame longs, get out of those longs. Gap close, gap rules. If we can't close the gap relatively early, I'll be looking for opportunities to buy weakness in crude oil. But again, the overnight inventory could provide us with a better trade location for those longs if that is what we are trying to do. I guess it depends on what side of the boat you're fishing off of. NASDAQ. Very similar situation to the S&Ps, except for one thing. We did see higher volume yesterday, but we did add estimated 6,400 new contracts on the push to the downside. All right. Gerald, the final numbers come out around 9:30 each day. So if you have the preliminary up there, you just refresh the page, and if the final is out, it will refresh the page to the final numbers. Okay, these open interest numbers I would have to guess, are extremely complicated even for the exchange to tally, I guess would be the word. And so it takes them a little bit of time. All right. You got it, Gerard. All right. What were we doing here? No real GDP response. Very narrow range last night, just teetering in and under the dead cat bounce that we had yesterday. And, this was a equally as sore a toe that we stubbed yesterday with the consumer confidence numbers. We did close the gap here, where I think we're still working on doing that in the S&Ps. We did trade to this naked point of control here, If we accept value, price could bring us back up to this level, 11,965 for repair. If we reject yesterday and we see sellers continuing to come into this market, there are two good visuals for targets, and those are these naked points of control down here, 11,418 and 11,300. You got to see how these traders and investors digest this information. Gold still range bound. In the extended trading hours last night, we did take a look down below our extremes of the area of balance we've been in, and that was very swiftly rejected. And of course, it had to happen in the extended trading hours because this is something I would have liked to have been possibly participating in, but now price is already back to the center of the range. Our little tennis player is ready for the volley. If it comes above him, if it comes below him, he is ready. So again, we are in short time frame control. Volume continues to slow. Open interest, we lost 1,000 in open interest yesterday, which is largely moot or inert or doesn't matter. So again, this market is just kind of presenting as a market I want to monitor and keep an eye on, and only really truly focus on the extremes of balance. We had our opportunity last night, rejected. Looks like we kind of opened with a gap and we're continuing higher, but we're going to be looking again for short time frame levels with which to lean on. I don't really want to fight this upside move. It's dead center in value and in last week's range, but I certainly, having a hard time buying it. It's the center. There's no real reference here. We've got Sunday night's high up here, which would be something I would think about. Naked point of control up here. I don't have anything that I can lean on in gold to really look for to get my teeth into something there. The euro, kind of a similar situation. I mean, we did get the look last night at last week's low. We're still in short time frame control. We lost 4,100 in open interest yesterday, where we were kind of hopeful that we were starting to see some open interest coming into this market. We lost a bunch of it yesterday. Volume wasn't bad yesterday, but we really still didn't really go anywhere. We have the extended trading hour rejection of last week's low, or relatively close to it. Looking at the 30-minute chart, here's our stab at last week's low, a little short of it, of course. The market's in range and in value, and there's no real change to the perception of value of the euro. So what am I in a rush for here? I'm not. Okay, we do have no gap here. We've got naked point of control here. I mean, there's all kinds of short time frame levels to look at and to lean on to limit risk, but I'm not looking at any huge opportunities here unless something seriously changes. I mean, we're sitting at settlement right now. We've opened. We've just been hanging around. A little different than gold this morning. For the 10-year, falling into balance, falling into range. Seems like it's setting in for a little bit of a nap. Volume and open interest increased. It sounds encouraging, but still looks like we're kind of short time frame controlled here. A little bit higher volume yesterday, nothing to write home about. We did manage to add 3,400 or 34,000, I should say, in estimated open interest. So maybe there's a little bit of life coming back into this market. And looking at this bull flag, I mean, we've really kind of broken out above it. We've opened with a gap. We've yet been able to close that gap. We have overnight inventory to the long side that hasn't capitulated even to the point where we've been able to close the gap. Looking at the gap close and this line here as potential for a supportive area, and the fact that it allows me to limit risk on that trade is the thing that really turns me on about it. I don't know if it's going to work, but at least it gives me the chance to limit the risk. No gap close here yet. That's important information. And for the natural gas. Okay, are we starting to build a bear flag here? We very well could be. We had pretty decent volume. Volume is increasing, but we lost 1,900 in open interest yesterday for that session. So the upside, much the way the S&Ps had been putting up hollow rallies, it looks like we're doing the same thing here, perhaps in the natural gas. Are they related? No. But is the auction process the same in all of these markets? Yes. Without volume, without interest in price moving in a particular direction, it's not going to happen. Take a look at the 30-minute chart. All right, now we can move this to a little bit more reasonable area here. I was not really pleased about that angle. So here's the low, here's the high, not to the low here now, to the high. It just seems as though this market is coiling for one thing to move one way or another. Yeah, I'm much more pleased with the placement of this line than the previous line, which was very tight on last night's range. Overnight inventory was long. We had an overnight inventory move that failed to take us all the way back down to settlement or value low. That's important information. And again, I find myself thankful that I'm not a natural gas trader. It is a vicious market, and we don't want to be in vicious markets. All right. So tomorrow is going to be my last forecast for my little vacation. I'm looking forward to getting some good rest. I'm gonna separate myself from the markets as much as I can. I'm probably not going to be actively trading. Of course, I will be keeping an eye on things that in the markets and just kind of, the even profitable traders have to heal up. Of course, every loss takes a bite out of you. Every profit puts a bite of that back. Yesterday's move to the downside, even though I did participate and okay on it, I felt like I missed it, and those down moves always seem to be much more on my mental capital, even if I don't participate. The down days always seem to be they always seem to use a lot more mental capital, even if I don't participate that much. I'm going to be back on the 11th of July. We're starting our 4-day strategies classes that week, and I'm going to be looking very much forward to being back with everybody. Now, the week of the 11th, we're going to be doing the forecast. We're going to be doing Make Hogue Money, but we won't be doing group coaching because those four days of classes are going to be at 12:30, which is going to overlap with our group coaching sessions. So today will be the last group coaching until after that week after I think it'll be the 18th or 19th will be the next group coaching session. So we're going to make the most of this one today. We're going to make the most of our trading today. And stay humble, grateful, and creative in your trading. I mean, that's part of what it takes. Humility to know that we don't know what we don't know. Humility to know that we don't know the outcome of anything. All we're doing is working on hypothesis and probability. Losses are not a personal affront to us. We have to learn to take losses quickly and with grace. Profits, we try and let those run. The professionals are always looking for those asymmetric opportunities. Small risk, big rewards. And make sure that you keep track of your activities. Keep track of how close you stay to your process and your your strategies. We all tend to step away from them a little bit. Give yourself a grade. How did I do following my strategy and my process today? Did I take 10 trades and 2 of them were out of process? I'd give myself on that an 80%. Not bad. We can't be, none of us is perfect, of course, and so that's where that humility comes in. And humility is kind of a funny thing, because the moment you say you are humble, you've lost your humility. So just keep that in mind. Always be kind to yourself. Always be kind to others. Always pray for world peace. And let's take our deep breath. Humble, grateful, and creative. Looking forward to seeing everybody on group coaching. And again, today will be the last recap for this week, and all next week. Of course, our good friend JD is going to be covering for the forecast and the recap. So I'm looking forward to seeing him. Looking forward to seeing you all when I get back. Blessings, and I still got the recap today and the forecast tomorrow. So I feel like I'm leaving already. Maybe to some degree, I already have. Anyways, get out there and profit today. Trade well. I'll see you at group coaching, and again on the recap. We're gonna sit back, have a beer or a cocktail, and get ready for our vacation, or my vacation. But everybody's getting a long weekend this weekend with the Independence Day holiday. God bless you. God bless the America. Keep praying for peace, and have a great trading day. I'll see you in the proverbial pit here in just a few minutes. Trade well today.